That's when you just look at them and you just do that like head nod, and then they do that head nod back
right.
because you know what?
Respect.
Real, recognize real.
That's right.
Respect right there. Respect.
Yes.
That's right.
Welcome back. We are here doing what we do every single weekend, bringing you the good news of mortgages and home loans. You can text in your questions, as the man said when he read it off of his knuckles, to 77031. You can also go to homeloansradio.com. You can get your questions answered there. You can do research. You can find out about being a first-time home buyer. There's videos. There's PDFs. I almost said PFDs, like personal flotation devices. There are no PFDs on the website, but there are PDFs and guides and videos and 100+ hours of podcasts of all the shows we've ever done, or most of them, that we deemed, appropriate or didn't get lost in the ancient archives of 2019 or
in the interweb.
Yeah, sometimes it happens. Sometimes you lose a show here or there, but they're all there, and you can go there and find out. I will say, as I've been saying, interest rates have taken a little tick up. We're seeing, but not bad. I mean, we're still in a good range where if you have a rate with a 4 or 5 in front of it, you should definitely be thinking about doing a refinance. Get a quote at least. I mean, if you don't do anything else, go to homeloansradio.com, or if not me, somewhere else. Go and get a quote. At least somebody that gives you a free quote, you can look at it and you can say, okay, that only saves me $72 a month. It's not worth it. Right. Or you might find out, I had a person this week, they were saying, I've been putting this off for 2 years, but go ahead and give me a quote, and we gave them
have low expectations.
Gave them a quote, and they were saving over $500 a month because not only were we lowering their rate, the rate wasn't bad. It was like 4 1/4. And we got it down over a point and almost a point and a quarter. But they were paying PMI of $260 a month, and they didn't even realize it.
Everybody forgets the PMI.
There was a study done recently where they said over 70% of people that could refinance and go down on their rate at least 1 point haven't done it yet. And they also said 52% of the people surveyed didn't know the interest rate that they had, and over 50% weren't sure if they had PMI yet or not. So you may be sitting there paying PMI and have no idea. I got news for you. If you've got an FHA loan, you're paying PMI. If you're not sure if you have an FHA loan, you need to find out, because you could be paying it for no reason.
Right.
You go to homeloansradio.com. We'll sort that out for you. We'll tell you what you could do and what you, and what the steps are. And then if you decide it's right for you, then good. We'll get it done. We're doing loans, anywhere from 2 weeks to 4 weeks is a typical closing time on a refinance, depending on whether you get an appraisal waiver or not, which is pretty prevalent right now. We're getting a lot of them where you don't even have to do an appraisal to get the loan done.
I feel like we've had this question before, but I'm not sure. I've had an older home that is free and clear, and I'm thinking of taking out all of the equity and then demolishing it and using the money to build a new house. Can I do that?
No.
Did you remember that question, Fritz? Because I know
I've never ever heard that before. They want to demolish the house and then
take that pile of money, and build a new house.
So if you demolish a house, it turns into a pile of money?
No, they're saying they want to refi it.
I would have been busting down houses since I was 10, my man. You know what I mean?
They want to refi, get all the money out of it for the equity they have. And then once they have their pile of money, then they want to come tear that house down, take that pile of money, put it in a better house.
Okay.
Can't do that, though.
A better house on that same land.
Right.
No.
With that pile of money.
You can't do that. It's kind of, well, I don't want to say mortgage 101, but when you're borrowing a big sum of money like that, you need to have collateral.
Mm-hmm.
And the collateral is the house.
Right.
Not the land. That's like saying, if I
get a car loan,
I get a car loan and I destroy that car, you're going to give me the money to buy a new car. Well, you got insurance for that.
You
but
still owe on that car.
I think if you choose to demolish it, you're not going to get your insurance money. But yeah, the collateral, the house is the house. Now the land will have some value. When you do an appraisal of a property, the land is going to have some value. But it's usually maybe 20% of the overall on average.
Not enough to buy a house.
Yeah,
build a house.
If you got a $300,000 house, the land might be worth $40,000 or $50,000 or $60,000. The house is the bulk of the value, even if it's not a very fancy house. It's still based on what other houses like it are selling for. So when they do the appraisal, it's based on that. So no.
I mean, what if you did tear down the house and insurance covered the house? Then you still have your money that you got from the house.
Yeah, and then you build like 2 houses inside of that house with a house surrounding it.
Both of you stop. It's not going to work. I'm going to go back to your first faulty.
What if there are lots of tiny houses?
We're going to figure this out, MJ. We're going to figure this out.
If you buy a lot of cars and you park them all in there and you live in a different one each night.
Yeah. And there's an
No shipping
elevator.
containers.
No, all of that's no. First of all, your premise is wrong. If you demolish the house, insurance is not going to pay you for it.
No, yeah.
Well, I mean, they don't know I did it. They think it just happened.
That's insurance
MJ, this
fraud.
is live radio.
Oh,
crime.
okay, right. Okay, so that's against the law. Okay, it
yeah.
makes sense.
So they
Seems reasonable that they would have that, in place.
So here's the thing: insurance is for accidents.
I see.
It's like, if a hurricane demolishes your house, or you accidentally leave the bacon on the stove and go to sleep, which is
So
bad.
not a
Bacon
wrecking
and
ball.
air quotes.
Yeah.
Well, officer, I was just heating up my gasoline like I do every night. I mean, my
Right?
bacon.
That's how I make my bacon. I make my bacon
None of that is okay.
under an open fire in my living room.
Done. That is okay.
They have inspectors, they have experts from the fire department. Arson, they call them arson investigators.
I see.
They will come in there and they'll be able to tell if you
That's-
used
Well, that's
an
no fun.
accelerant other than bacon
That's
to
problematic.
Yeah.
burn your house down. No, you can't do that. That's insurance fraud. So no, insurance will not pay you for demolishing the house. You can't demolish the house. The lender's never going to agree to it. In fact, if you were to go and read your mortgage on your house right now, it will tell you cannot destroy the collateral that you were granted the loan on. And if you do, they will immediately call the loan due, and you'll owe them all the money
I see.
that it takes to pay off your mortgage. So you'll end up in a shortage, because even if you do the best cash out loan there is, you can only get 80% of the value.
I see.
And if you demolish it, you're going to owe 100% of your mortgage back. So, but the bottom
All
line,
right.
the
I'm
bottom
sorry,
line answer,
Texter. That was a terrible plan. It won't work.
good try.
Yeah, it was a
So,
good idea. I mean,
I get it.
I'm not going to dump on that awesome idea. It's just,
I know.
it's not going to play.
I know.
It's not going to fly.
When I first heard about PMI, I thought that meant that if I died, my mortgage was paid off. I always thought that was a cool thing. It's like, oh, I don't need to worry about this. Something happens to me, it's all paid off. I found out
there is insurance for that. It's a type of mortgage and life insurance,
right? But
which
that's
will
not what
pay
I
off
thought.
your mortgage.
Yeah.
But that ain't it.
No,
that's
I
a
thought it
different
was
kind.
something else. I was like, oh, well, this is covered.
You're listening to Home Loans Radio, where we answer all the questions you text in to us about
better
home
or
loans
worse.
or mortgages. And in spite of my crew, I try and get through and get the answer out, in spite of all the shenanigans. Somebody's got to be the straight man. I know you guys are rolling your eyes right now.
That's
I'm
you.
not.
That's you for sure. We need you. You are the ballast to our ship.
SHIP.
Yeah,
is what-
Yes. Oh, that is exactly what I meant. Of
If
course.
FCC is listening, that was ship.
That was
Yes.
ship. Of course. That's where ballast works out, right?
Mhm.
Yeah. Mhm.
I suppose it could be for
Oh
both,
dear.
but
Oh dear. Stop that.
you can text in your question to 77031, and we will answer as many of them as we can get to today. We've still got a couple, 3 segments left, so get them into us, and we'll answer them. You can also go to homeloansradio.com, ask questions there, get answers there, check out the reviews, apply now, do all that kind of stuff.
If I bought my home a year ago and want to refi, why can't I use the same appraisal? Nothing has changed in my house. People ask this a lot because, they feel like that appraisal should be
Yeah, and
transferable.
I will say, and a lot of times when you're doing a refinance today, you can get an appraisal waiver. So what that means is when we put your loan together, there's an automated computer system through Fannie Mae and Freddie Mac and FHA and VA and USDA, all the big entities, where we put together the whole loan application and we put it in there and we put what we think the value is. And based on their statistics, based on the appraisal that they accepted in the past, based on other sales and comps in the neighborhood that they did or are doing the loans for, they may grant an appraisal waiver. And that just means simply, okay, we say the house is worth $350. They say, all right, we're cool with that. You don't need an appraisal. Just go with $350. So that's happening quite a bit. I would say I'm seeing that in the more urban, in the cities and subdivisions where there's a lot of houses, that I'm seeing
That are moving?
Yeah, probably about 50% of the time. I see less of them out in rural areas where you might not have as many neighbors nearby, where houses have changed hands recently. So you may be able to get an appraisal waiver. The reason you can't use your old appraisal is because things change, values change. And frankly, I don't think you'd want to, because house prices in Florida have gone up about 15% in the last year.
Tell me about it.
So you want a new appraisal. Or if we're asking for an appraisal waiver, I'm going to ask for it about 20% above whatever your last appraisal said. So that helps you. If you get a higher value, you may be able to get PMI where you might not be able to if you used your old appraisal. You also might be able to borrow more money if you're trying to maximize the amount that you could borrow, or you may be able to get a lower rate because lower loan to values give you a lower rate. Great question. We're going to take a quick break. We'll be right back.
Do you have a question for that mortgage guy, Don? Text us at 77031. Now back to Home Loans Radio on Real Radio.
Good morning. Happy Pride, everybody. You are listening to Home Loans Radio with that mortgage guy, Don. I'm MJ. Got Fritz in the high tower, keeping it all clicking along.
Yeah.
Clicking and a clacking.
I'm doing all that.
Yep, yeah, you are. And doing it amazingly.
Hey, thanks.
We're so grateful for you, Fritz.
I'm grateful for you guys. That was my
Welcome
Eeyore.
back to... What's that, Fritz?
That was my Eeyore, sorry.
Okay.
Eeyore. Oh.
I love that little adorable donkey.
Welcome back to Home Loans Radio, where we do what we do every single weekend, here for you, answering your questions about home loans, mortgages. I am a mortgage expert, and you can ask us questions here by texting the show at 77031. You can also tell us what you're doing. We forgot to mention that. MJ loves to hear what you're doing out there.
I do like to know.
And you can also go to homeloansradio.com and do all the things that you can do there, including applying to get pre-approved or applying for a refinance quote or reading reviews or, I don't know, whatever you want to do.
Sure.
You can, if you're having trouble getting to sleep, man, get on there and go listen to a podcast about
sleepy goodness right there.
First time home buyers.
Tuck in, pull your covers up, get your buds in.
Challenge you to go to sleep while listening to one of our podcasts. Double dog dare you. You can't do it.
No,
We're
you can't do
too entertaining.
That's right. Right when you start to get sleepy, Fritz will come in and
and he'll say something amusing.
Right?
Yeah, we're like the weekend amphetamine radio show. We just wake you up. We just wake you up.
Legal.
Yeah. Well,
with a prescription.
With
is that even
prescription,
something
that's
that
what
you
it is,
can get? I don't know.
Oh yeah, of course, yeah.
Sure.
Duh, obviously. Welcome back to the show. We've got a bunch of questions people have texted in to 77031.
Yeah, they're coming in hot.
You have questions.
Coming in hot.
I have answers. Let's get to work here, MJ.
Do you have any programs back now for self-employed buyers that use bank statements or for income?
Oh, hell yeah.
Oh boy.
Yeah, no, we
That's
do.
exciting.
Yeah, we've had them back for actually, I'd say since like June, July, they started to come back. It's a few different programs where if you're self-employed during COVID, when it started from like March of 20 till probably June of 21, there were none. But what the questioner is asking about is a program where you can use bank statements to qualify for a loan. Why would you want that? Well, you have to be self-employed to use this program. Otherwise, we're just going to go by your W-2s, and what you can prove, your pay stubs, and prove what you make. But if you're self-employed, it gets a little bit more complicated because people may write off a lot of business expenses. Maybe you bought a new, I don't know, let's say you got a landscaping business and you bought a couple new tractors, or you had to replace your truck or something like that. You write those things off and it can make it look like you didn't make any money that year, even though you did. Or you have other expenses that you have to write off, so it can make your money look like you're making half as much as you did. So of course it's your job as a self-employed person to write off as much as you can, and pay the appropriate taxes. But the bank statement loan allows you to do is base your income off of what you're actually putting in the bank every week or every month, as opposed to what the final number is on your tax returns after all of the business comings and goings of your expenses. So we have some programs that are back on that. There's actually some new ones. Before the kind of COVID break, I'm calling it, we had only a 12-month program. We had to have 12 months of your bank statements to show what the income is. And usually they'd calculate about 50% of that deposited income. We've got new programs now that even allow only the last 6 months or the last 3 months if you've been in business for more than 2 years or 5 years, depending on how long you've been in business. The only catch with those programs is you're not going to get that same 2.99 or 3% interest rate you might get if you used your tax returns. So they're considered a little bit riskier loan. So you're not going to, so you end up paying a little bit higher rate. But what it may help you do, especially if you are building your business and you think you're going to be making a lot more in a year or two, it may allow you to go ahead and buy that house and get into it now. And then you can look at refinancing a couple years down the road or 1 year down the road when you can use your tax returns. I had another person that this loan really worked for